This is a BC Eagle finance video. Brigham and Houston Chapter 2, Stock Market and Stock Market Returns. This section differentiates a little bit further the distinction between primary or IPO markets and secondary markets where individuals trade among each other. Let's take an example. Suppose Apple Computer decides to issue new shares of stock, and they would do this through the help of their investment banker. An investment banker is a broker that works as a financial intermediary between Apple and the investing public. The point to remember about an IPO is that this is the only time a corporation receives cash from the investing public. In a secondary market, stock trades between and among individual investors. The takeaway point is that no investor funds flows from the public to the corporation. In the secondary market, all transactions occur among the individual investors. Now, what is an IPO? An IPO is an initial public offering, and it occurs when a company issues stock to the public for the first time. It is the only time that a corporation gets a dime from the investing public. An IPO is also known as going public. It enables a company's owners to raise capital from the largest group of providers of capital, which is you and me and the person down the street. Now, there is a cost to this, and that is that public companies are highly regulated. The Securities and Exchange Commission, through the Investment Acts of 1933 and 1934, have given the Securities and Exchange Commission, the SEC, the power to regulate the information as well as the markets themselves. And they are very strict about that, so adherence to the SEC rules is very important for public companies, and they spend a great deal of time and a great deal of money in complying with these requirements. The secondary market, as a reminder, happens after the IPO and represents stock trades between individual investors. Funds are exchanged between individual investors, and no funds go to the issuing company. Let's distinguish IPOs from secondary markets a little bit further. Here's a diagram. Suppose you have a corporation that is going to need additional funding, and they decide to go the IPO route to get those funds. Now, this could happen whether it's an IPO for bonds or an IPO for shares of stock. The corporation would engage a professional by the name of an investment banker who acts as a financial intermediary between the corporation that wants to spend cash and the individual investors that collectively will supply that cash. The flow of activity goes something like this. During the IPO, the corporation would issue certificates, either a bond certificate for debt securities or a stock securities for equity securities, to the initial investor. In exchange, the initial investor, through the investment banker, would send dollars to the corporation. That is the extent of the initial public offering. Once the initial public offering is done, the corporation does not get a single dime from the millions of stock trades that happen in the secondary market. In the secondary market, there is only exchanges between individual investors. No money goes to the corporation. So if investor Allen sends shares of stock to investor Barbara then sends cash only to investor Allen. And the same thing would apply when investor Barbara would want to sell her shares. The shares go directly to investor Charlie. Charlie sends money to investor Barbara, and no money goes to the investing corporation. After the IPO, any stock trades are known as trades in the secondary market, and no cash goes to the investing corporation. Now it's your turn to check your learning for stock trades. Things that you should be able to do is to differentiate between closely held and publicly owned corporations, differentiate between primary or IPO markets and secondary markets. You should be able to define an IPO, and after a little bit of research either in the textbook or through an internet search, define what a Dutch auction is, also known as a double auction, and what famous company that you all know and you have all used its products use this Dutch auction for its large IPO. This is the end of section 2.4. Thank you for listening.